Well, I joined Asset Value Investors, or AVI, in 2002. So I've been here for 19 years. And I started off working as an investment analyst, supporting the fund managers. And I've progressed to become the lead fund manager and chief investment officer. Immediately prior to joining AVI, I spent a year at London Business School studying for a master's in finance. And for the 6 or 7 years before that, I worked as a chartered surveyor at a property investment company in central London. Well, that's a really interesting question. I'm learning every day from people around me and observing what other investment people are doing. But I would say that the person who's had the most influence on me has been the founder of Asset Value Investors, a gentleman by the name of John Walton, who, when I joined AVI in 2002, took me under his wing and really introduced me to the fascinating world of European family controlled holding companies. And we spent a lot of time traveling across Europe, meeting these businesses, learning about the companies, the assets that they owned, and really seeing the amazing, remarkable discounted valuations that they were trading at, and having some success over those years buying and investing in those companies and generating strong returns for our investors. And that focus on buying companies that others perhaps are overlooking and not aware of, and having the conviction in the quality of those assets and the belief that over time the market will come to re-rate them and value them appropriately has really set me up for my career at AVI. So I would say he's had the biggest influence on my career. Well, I would say that when I took over as the chief investment officer of AVI in 2015, at that time I had to stamp my own mark on the portfolio, and I had to rebuild our track record after a few years of challenging performance. So, thinking back to that time, I would say that that was the most challenging environment. We had to think about what the right thing to do was, think about how we're going to deliver returns for our investors over the long term, and really to find a way or a path that I could really commit to and have conviction about. Well, our investment process is really about finding good quality businesses, good quality assets that are mispriced and overlooked by the rest of the market. We're looking for companies essentially that are trading at discounts to their net asset value or their net realizable value. And for some reason or another, other investors are missing the opportunity. And so our investment process is built around a proprietary database that models a universe of several hundred companies around the world that share these characteristics of trading at discounts to net asset value. We monitor discounts over time. We meet with companies and do our own research and really try and identify the best opportunities for both growth in net asset value and contraction or narrowing in the discount. And I think this focus on this particular universe with this specific objective of finding companies at discounts to net asset value really does set us apart from most other fund managers around us. Well, as I said, when we're thinking about our investment process, we're looking to buy businesses that we think are going to appreciate in value over time, but we're looking to buy into them through listed structures that may be trading on the widest possible discounts. So we're really looking for the sources of of return to come from the double whammy, if you like, of NAV growth and discount contraction. So, in order for us to buy into something, we need to see both elements potentially at play. And when you come to think about the typical holding period or how long we might own a stock, well, there are stocks in the portfolio today that were in the portfolio when I joined in 2002. So really, that doesn't mean that we never buy or sell them or never reduce or add to positions. But really, we're looking at potential companies as being holdings in the fund forever, and certainly for a very long term. It doesn't always work like that, and some stocks and some investments will play out over a shorter time period. And by that I mean that having bought something and seen its discount disappear, perhaps, or seen it trade to a premium to NAV, we would sell out. So we don't hold things forever at whatever price, but subject to an opportunity having the potential to grow in value over time and still being on a discount, we can hold things forever. Well, over the last 5 years, the trust has returned about 115%. And that compares to a return of around 69% with its official benchmark, which is the MSCI World ex-US Index. So I would say that's a pretty healthy return over the 5 years. Over 3 years and 1 year, we've returned 38.9% and 57.9%, respectively, and both of those are comfortably ahead of the benchmark.